So welcome to late cycle, right? I mean, this quarter has been a lot like Q1, where if you beat on revenues and earnings, you're kind of flat, but if you miss, Carl, you are getting annihilated. And that is what late cycle is all about. So there's a couple of things, right? First is cash. Cash in the portfolio was trash for the last decade. The Fed has moved rates 8 times. Cash isn't the best asset class in the world, but when you're thinking about a V-shaped recovery in stocks and cash becomes a viable alternative, it becomes less of a V, right? The opportunity cost is lower. The second is, for a decade, when we were asset allocating, we went long stocks and we knew that if we had treasuries in the portfolio or a safe asset in the portfolio, we would get bailed out. Now, we're not getting bailed out this month, right? So late cycle, treasuries start to become a little bit tough of a hedge versus it was earlier in the cycle. And that happened in February and that happened this month. And then the third thing, foremost, Carl, we have seen a tremendous sell-off this month, right? So valuations on the stock market, if you don't believe that there's going to be a recession next year, if you don't believe that inflation, critically, is going to move higher, you've just gotten a great entry point for stocks this month.
But you said late cycle 3 times, so does that mean you see a recession?
No, so it's not like Beetlejuice saying it 3 times. Right? So late cycle for us, the biggest risk in late cycle is if you think a recession is happening in 2 months and that recession happens in 2 years, and then all of a sudden you've left a ton of return on the table. So we definitely think we're in late cycle, but who knows how long it's going to last? Well, at least through 2019.
Recessions 6 months after the Dow hits a high almost never happens. Right?
Right.
But that doesn't mean you're not calling for one. What is JP Morgan's recession?
So at least through 2019, Carl, we don't see 2 consecutive quarters of negative GDP growth, okay? So that, given the setup from this month, creates a nice entry point. The only thing that we would watch as kind of a right tail risk is inflation. If inflation picks up, then you have higher interest rates and lower stocks. We are not positioned for that. That is not the base case.